I mean, when it's at a million, will you regret having bought it at 100,000? When it's at 5 million, will you regret having bought it at 100,000? I think no. And I'm a firm believer. I'm like Sailor. I mean, it's going up forever, Laura. And I don't know if the number is 7 or 13 or 15. I don't know exactly the slope of the curve. I mean, there are a lot of things that can happen policy wise, regarding the dollar that can make it go up faster or slower. I mean, if I think the power law is a pretty good descriptive model looking backwards. And I use it as my base case looking forward, but all these models are meant to be broken because this is something new and different. And at some point in time, this one will be broken to the upside. I mean, that's the Gresham's law, hyper Bitcoinization.
Lawrence Lepard, a professional investment manager, says the Federal Reserve will write the next significant chapter for Bitcoin. If the Fed initiates another massive money printing cycle, he sees Bitcoin surging to levels like $300,000 or even $500,000 within just a couple of years. The script is familiar: liquidity floods in, everyone piles into Bitcoin, hype hits fever pitch, leverage builds, and then the cycle inevitably turns. Lepard warns that when that reversal comes, it won't be gentle. A crash back to $200,000, still far higher than where we are today, would be brutal enough to flush out latecomers who chased the rally. That's always been Bitcoin's rhythm: breathtaking rallies, punishing corrections, and then new basing periods that set the stage for the next breakout. The key mistake most newcomers make, according to Lepard, is underestimating the volatility. If you can't tolerate a 50% drawdown without panicking, you're probably overexposed. Panic selling in the middle of a crash is a sign that position size was miscalculated. The right approach is different. If you can see a significant correction as an opportunity to accumulate more, then you're appropriately positioned and thinking long-term. He also addresses one of the most common hang-ups: the idea that Bitcoin is too expensive because a single coin trades in the six-figure range. That thinking misses the point. You don't need to own a whole coin. Even a fraction matters, because if Bitcoin goes from $100,000 to $1 million, owning some will feel far better than owning none. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
I know outsiders listening to Bitcoiners find this nauseating, but ultimately everybody's going to have to buy this asset. Everybody. I mean, I don't care how much you hate it, don't believe in it, don't want to do it, think it's a joke, whatever. You're going to ultimately bend the knee. And so it's just a matter of when, because it's just going to keep on marching, and that's the hard thing, I think, for the average investor, the average citizen, the average person to get their arms around, because it's new. It's a technology. It's a technology breakthrough that did not exist before. And so, when the Wright brothers flew, did somebody think you were going to be able to take a supersonic plane from New York to London in 3.5 hours? Right. I mean, no fucking way, right? I mean, it just seems so absurd as to be ridiculous. It took 2 weeks on a steamship to get to London, but here we are. And, I think it's of the same kind of nature. It's just, it's big, it's inevitable, it's going to keep going. And, at every level, it'll become more and more obvious that this is something that should be done. And which, by the way, that also speaks to the issue. I mean, I find in my orange pilling efforts, probably, I've over the years, I've encountered all kinds of resistance. One of the biggest, relatively intelligent ones was, well, the government's going to kill that, and all right. I explained they couldn't, but I get it. When the ETF came out, that narrative kind of died down a little bit. I think the narrative now that's kind of got a lot of people is, oh Christ, you bought it a lot cheaper. I can't pay $120,000 for this thing. I can't afford a whole one. Well, you don't need a whole one, right? And that's really, fixing on a number and looking in the rearview mirror. Look, Max Kaiser bought it at $2. My first one was $300. So, and I wasn't sitting there. I wish I'd been Max, but I wasn't. And so be it. When it's at a million, will you regret having bought it at 100,000? When it's at 5 million, will you regret having bought it at 100,000? I think no. And, I'm a firm believer, I'm like Sailor. It's going up forever, Laura. And, I don't know if the number is 7 or 13 or 15. I don't know exactly the slope of the curve. There are a lot of things that can happen policy wise, regarding the dollar that can, make it go up faster or slower. I think the power law is a pretty good descriptive model looking backwards. And I use it as my base case looking forward. But all these models are meant to be broken because this is something new and different. And at some point in time, this one will be broken to the upside. that's the, that's the Gresham's law, hyper Bitcoinization. I mean, when everyone realizes the dollar is toast, it's going to take the power law and just throw it in the trash and go up, really quickly, very, very, very aggressively. So that's coming, but that day might be 10 years from now. I don't know when that day is, it could be,
Yep,
I don't think it could be any sooner than 3 or 4 years from now, but it's coming in my view. If you ask me my concerns, I mean, one concern I have is that, they'll do the big print, Bitcoin will go to, I don't know, call it 250, 300, 400, 500,000. And then everybody and their brother, let's call that within the next 2 years. Okay.
Mm-hmm.
And at that point, everybody and their brother will be coming into it. Right. And just like, and everyone will be talking about it, and everyone will say it's going to 1 million. And so people will be buying it. And, people get too leveraged, too out over their skis, too this, too that. And then the 4-year cycle, which maybe now will become the 5.5-year cycle, will kick in and will correct from 400 down to 200. And the last guy that bought at 400 will feel like, oh my God, I got snookered. But, the 200 will be a new base on which we'll launch to 2 million. And so, it's just, I mean, the thing that cannot be ignored, and I think sometimes Bitcoiners don't do an adequate job of describing to a newbie who's looking to put some money into it, is to understand that the thing does draw down from time to time, and not in a small way. I mean, we've had multiple very large drawdowns. And so when people say to me, I want to get into it, how much should I put in? I ask the question, I say, well, if you put your money into it and it goes down 50%, are you going to think this is a bargain, I want to buy more, or I made a mistake, I need to sell it? Because if it's, I made a mistake, I need to sell it, you bought too much to begin with. If it's, this is a bargain, I want to buy more, you're thinking correctly. And your allocation was correct.
Lawrence Lepard points out that even Donald Trump floated ideas like handing out tariff dividend checks, while the country was already running a massive deficit. To him, it's just another spin on stimulus checks. The government distributes money to ease short-term pain, but the long-term effect is higher prices for everyone. That's why groceries cost more today. Printing and distributing cash doesn't create wealth, it just devalues the dollars already in circulation. Lepard expects inflation to remain a persistent force throughout this decade, not a passing issue. The narrative that price pressures are transitory has already been disproven. Instead, he argues that inflation will be an ongoing drag, eroding purchasing power year after year. As it intensifies, the political landscape will shift. People squeezed by rising costs will start demanding change. And that's when advocates of sound money could finally find their moment. Figures like Ron Paul, Rand Paul, and Thomas Massie, as well as pro-Bitcoin politicians such as Cynthia Lummis, may step into the spotlight as frustration grows. Still, Lepard doesn't expect reform to happen preemptively. History shows that societies usually cling to the status quo until the pain becomes unbearable. More likely, inflation and dollar debasement will grind on for years, gradually eroding confidence. Only when the middle class feels crushed and the public demands a reset will real monetary reform be forced onto the table. Until then, the cycle of printing, deficits, and inflation continues to feed on itself. Let's get back to the interview.
It's really hard to know what all the policy responses are going to be in advance. It's impossible to know, but, we can kind of look at the tea leaves, look at the clues. I mean, one thing is right now, Social Security and Medicare are untouchable because the boomer voting block is an enormous block and it determines elections. Well, boomers will start dying. And, 10 or 20 years from now, the boomer voting block won't be as big. And so you'll be able to touch those things, I suspect. So that's one change. I think another change is, right now we got red team in control. And in my view, red team is infinitely better than blue team, even though they both kind of suck in certain ways. Yeah. But in a fourth turning, the pattern is that, life is hard. And I think it is hard for a lot of people right now. It's sad. That's why I wrote the book. But, and when life is hard and you don't know why and you're angry, you vote the bums out. So, I hope this doesn't happen, but I could see a scenario where Trump term ends, inflation is pretty high. Some things have been solved, but not enough. The Democrats promise a lot of goodies and Team Blue wins in 4 years, and, what would they try? Universal basic income. Andrew Yang has talked about that. AOC has talked about that. Look, even Trump, here's an amazing thing, right? So we're running these enormous deficits. And one of the nice offsets to the deficits I talked about in some other pods, I think it's a really positive thing, is these tariffs have actually increased government revenue substantially. We're getting between $100 and $200 billion a year in tariff revenue that we did not get. So that helps to reduce the deficit. What does Trump do? He turns around and turns around and says, well, maybe we should issue tariff dividend checks. Well, I'm like, dude, with what? I mean, you know, I mean, you're running an enormous deficit. You're talking, but again, it's buying votes, it's stimmies, right? I mean, and so COVID opened up a whole new can of worms where, not only when times get tough, not only does the government maybe cut interest rates to zero, help the banks out, backstop them all, Fed comes in with a lot of money printing, but also they think, okay, who's hurting? Let's send them some money. Well, that's money they don't have. And what they're doing, obviously, is they're hurting everybody who has money because they're diluting the value. And that's why all our grocery costs have gone up. So, I think, if Team Blue were to win, I mean, taxes are higher, universal basic income comes in, more transfer payments, means test Social Security. I mean, don't get me wrong. Some of these things probably should be done. I mean, when Social, I mean, it's sad and ironic, some of the things that happen, right? Remember when Social Security was set up, the average age for men dying in the United States was in their 60s, right? I mean, we didn't have everybody living to 70, 80, 90. We didn't have all these expensive medical procedures. I mean, you got near end of life and things started going wrong. There wasn't a lot you could spend on, but now, of course, they can spend thousands or millions trying to keep you alive, and they do. And so,
yeah,
so I mean, it's made it. It's just it's all tipped upside down. And of course, the whole medical establishment's broken, and I mean that's a whole different rabbit hole that Dr. Cruz and so many others have gone down. We don't need to go there. But the point is that it's all really, really upside down. And if you ask me how it's going to unfold, I think what's going to happen here in this decade is inflation's going to continue to grow. It's going to become a persistent problem and get worse. People are going to realize it's getting worse, and we're going to start to see a real groundswell movement for sound money as everybody just says, God damn it, this inflation is eating me alive. I can't take it anymore. And so you're going to see politicians who are sound money politicians actually start to gain some traction. The Ron Pauls, the Thomas Masseys, the Rand Pauls, et cetera. Maybe some Bitcoiners eventually, and, Cynthia Loomis, et cetera. And that will be a good thing. And, I don't know. I mean, and maybe, I mean, who knows? I talked about it in the book because there's chapter 22 of the book talks about policy responses. I mean, if a really forward-thinking president would say, hey, look, guys, we followed the wrong model. Keynes was an idiot. We can't spend our way into prosperity. We need to balance the budget and reset the debt. And we're going to do it in the following manner. And I lay it out how you do it in the book. And so, that's what a forward-thinking politician would do. The problem is politicians generally aren't forward-thinking, and they generally don't do stuff like that unless there's a crisis or they're forced to do it. So, my sense is that, the inflation is going to continue. The dollar is going to continue to lose value. It's going to get really acute and more painful, sadly. And when eventually at some point, the outcry will be so damn large. Look, the boomers, by hanging on to their retirement incomes and all that stuff, okay, you got the votes, you can hang on to your retirement incomes, but how's the market going to square that circle? It's not going to buy as much, Yeah, you're going to get your Social Security check, but we're going to have such massive inflation that you're not really going to be happy with it. So we didn't actually cut Social Security because you voted against that. You didn't want that. But we really did cut Social Security because by running these policies, we inflated the shit out of everything, and everything you need to buy costs you twice as much. So you kind of got a real Social Security cut through the back door. But that, to me, again, that's dishonest. I mean, what we should do is everything should be through the front door, and we should have sound money. And that's what the book is all about.
What emerges is a picture of a financial system addicted to short-term fixes, where each round of monetary expansion buys time but deepens the structural cracks. Inflation erodes household stability, while the promise of outsized Bitcoin gains attracts capital to one of the few assets perceived as a form of protection against it. The tension between these two forces, an eroding currency and a rising digital hedge, sets the stage for volatile years ahead. Could this slow grind of policy missteps and rising living costs ultimately push digital money from the fringe into the political mainstream? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.